Watching this video will explain the drivers behind the Nikkei's recent surge. We look at why it hit 66,000. The Nikkei 225 has finally reached a historic milestone. It climbed to an unprecedented 66,000 points. This record high is firmly driven by strong corporate earnings. Gorokoro Equity Investment is a Japanese analyst focusing on fundamentals. They highlight that the current PER of 17.7 is reasonable. This valuation is justified by significant growth in EPS. Japanese companies are seeing structural improvements in profitability. Unlike the 1980s bubble, these prices are backed by profit. Investors are now paying for actual performance, not just speculation. Technical factors are also playing a major role in this ascent. Hijidura Stock Channel is a technical analyst with 50,000 subscribers. He points out that a short squeeze is likely building up. This movement is occurring just before the June major SQ date. Selling pressure from pension fund rebalancing has recently ended. This creates a supply vacuum in the market. Short sellers are now being forced to buy back their positions. This mechanical buying is pushing the index to new heights. Global institutional investors are re-evaluating their Japan weightings. The combination of cheap valuations and technical momentum is powerful. We are entering a new phase for the Tokyo market. We must monitor if quarterly earnings can sustain these levels. The June settlement will be a major test for market stability. High volatility may continue as we approach this critical deadline. Stay tuned as we analyze the next targets for the Nikkei. Rumors of a 60-day ceasefire between the US and Iran are impacting markets. Global energy markets are shifting on news of a potential de-escalation. Specifically, reports suggest a deal to reopen the Strait of Hormuz. CNBC TV 18, a global business news network, reports a deal is near. The agreement would allow for a 60-day window of eased tensions. However, the deal requires the final approval of the Trump administration. Political hurdles in Washington remain the primary variable to watch. This geopolitical shift is already reflected in global commodity pricing. Fox Business, a U.S. financial news media outlet, reports a price drop. Brent crude has declined to $93 on these de-escalation hopes. The drop reflects a narrowing of the geopolitical risk premium. Reopening Hormuz would secure 1/5 of the world's oil supply. This is a critical maritime artery for global energy distribution. For investors, this news suggests a reduction in inflationary risks. Lower energy costs could provide a tailwind for the broader market. A confirmed truce could lead to a reassessment of energy valuations. It would also ease logistics bottlenecks in international shipping. Traders should monitor Washington for confirmation of these rumors. Official statements will be needed to validate this market move. The next 60 days will determine the future of regional stability. Any setback could quickly send oil prices back toward previous highs. Stability in the Middle East remains a top priority for global trade. This situation is the most critical macro factor for markets this week. The Japanese Ministry of Finance has confirmed a staggering record. They spent 11.73 trillion yen to support the weakening yen. This massive intervention occurred between April 26th and May 29th. The Japan Times reported this as a historic high for a single period. It easily surpasses the previous records set in late 2022. The goal was to halt the yen's rapid slide against the dollar. However, the long-term impact remains a subject of intense debate. Nobujuku, a former institutional trader and technical strategist, offers a critical perspective. He points out that the effect of direct intervention has been limited. Despite the record spending, the yen's recovery has been short-lived. Instead, he highlights a significant shift in the fundamental landscape. The Bank of Japan is now moving toward rate hike expectations. Why is this 11.7 trillion yen bet so critical for global investors? It signals the ministry's absolute resolve to fight volatility. but it also exposes the limits of currency intervention. Without interest rate changes, the effect may be temporary. For investors, the focus is shifting to the BOJ's next move. This transition marks a critical turning point for Japanese markets. The market is currently testing the government's resolve. Key price levels are being watched by traders worldwide. The battle with global speculators has entered a new phase. This record-breaking intervention proves the government will take extreme measures. Yet, the underlying trend depends on future interest rate differentials. Stay tuned to understand how these dynamics influence your portfolio. The AI investment cycle is entering a new chapter known as Phase 2. Capital is shifting from chip designers to the infrastructure layer. This includes servers and specialized electronic components. Gakko Channel is an investment educator focusing on global macro trends. They highlight that the AI wave is moving towards server makers like Dell. It is also reaching the power and cooling layers. However, the most explosive growth is appearing in the Japanese component sector. Nikkei CNBC reported that Murata Manufacturing recently hit a stop high. This was driven by massive demand for AI server MLCCs. MLCCs are multi-layer ceramic capacitors. They are essential for stabilizing power in high-performance computing. An AI server requires significantly more MLCCs than a standard PC. The Japan Times also reported warnings from Teo Yuden. They described the current demand for AI spec capacitors as scary. Let us examine the market data from June 1, 2026. Murata Manufacturing, ticker 6981, has shown incredible momentum. Over the past 3 months, the stock surged 198.5%. The price moved from 3224 yen to 9,625 yen. Technically, the RSI stands at 89.4. This indicates a heavily overbought condition. However, the price is currently in a band walk above the upper Bollinger Band. This shows that the uptrend remains exceptionally strong. Similar trends are visible in the US market with Dell Technologies. Dell stock rose 218.7% over the same 3-month period. It reached a closing price of $420.91. SoftBank Group, ticker 9984, also climbed 94.7%. This capital rotation suggests that Phase 1, focused on chips, is maturing. We are now seeing the secondary boom in the physical hardware that supports AI. For individual investors, the Japanese component sector offers a unique entry point. These companies hold dominant global market shares in high-end capacitors. The scary demand level suggests that earnings growth may exceed analyst estimates. However, investors should monitor the high RSI levels for potential short-term pullbacks. The key focus for next week is whether Murata can maintain its position above the 5-day moving average. This MLCC boom represents a structural shift in the global AI supply chain. Sovereign debt risks are returning to the center stage of global markets. Recent movements in the UK bond market are particularly alarming for investors. Bloomberg Television reports that UK gilt yields have surpassed Truce-era levels. Bloomberg is a global leader in business and financial data. They note that the market is now imposing strict fiscal discipline. Governments can no longer spend without facing immediate market consequences. This bond vigilante behavior is a major shift from the past decade. Historically, central banks suppressed these yields through quantitative easing. Now, that safety net has largely disappeared. The situation in the United States is equally concerning for long-term stability. The U.S. national debt ratio has officially hit 120% of GDP. This level creates significant pressure on the Federal Reserve's policy options. CNBC Television discusses Kevin Warsh as a potential candidate for Fed chair. CNBC is a prominent U.S. business news media outlet. Warsh focuses heavily on the risks of long-term debt and persistent inflation. His potential leadership suggests a more hawkish stance toward fiscal excess. The market is watching if the Fed will prioritize debt sustainability. Bloomberg and CNBC both point to a new era of fiscal accountability. Bloomberg emphasizes the immediate market reaction in the bond yields. CNBC focuses on the potential for institutional and policy-driven shifts. For individual investors, these sovereign debt alarms have direct consequences. Rising long-term yields act as a gravity force on equity valuations. High-growth technology stocks are particularly sensitive to interest rate spikes. Real estate investment trusts face headwinds from higher borrowing costs. Looking ahead, the focus remains on upcoming fiscal budget announcements. A key scenario is whether other nations face similar gilt-style sell-offs. Investors should monitor the 10-year Treasury yield as a primary risk gauge. The era of debt doesn't matter has officially come to an end. Be prepared for increased volatility in both bond and equity markets. We will continue to track these sovereign risks closely. The AI revolution is driving a massive surge in physical infrastructure. Data centers are becoming the backbone of the global economy. Copper demand for these centers is projected to double by 2028. Nobujuku, a technical strategist and market educator, emphasizes this shift. He notes that Dr. Copper is the primary play for investors today. As electrical grids expand, copper becomes an indispensable resource. Next, we explore the frontier of quantum computing technology. Gorokoro Equity Investment, a Japanese stock analyst, points to Fixstars. The company is leading a rally following IBM's massive investment plan. Quantum computing offers the next leap in AI processing power. Fixstars is positioned as a key domestic player in this ecosystem. Looking at the technicals, Murata Manufacturing shows extreme momentum. The stock price skyrocketed 198.5% over the last 3 months. The RSI has hit 89.4, placing it deep in overbought territory. It is currently performing a band walk above the upper Bollinger Band. Dell Technologies exhibits a very similar parabolic trend. It has gained 218.7% with an RSI also exceeding 89. Meanwhile, SoftBank Group shows a slightly different technical profile. It has risen 94.7%, but its RSI remains at a neutral 66. This suggests SoftBank may have more stability compared to others. These infrastructure and quantum plays are the core of the AI era. Japan is currently facing a record population drop. This structural crisis is forcing an evolution in AI and robotics. The recent Humanoid Summit in Tokyo showcased this massive shift. Japan Today, an English news outlet covering Japanese current affairs, reports on the event. The outlet highlights robots as the final solution to labor shortages. Robots are no longer just tools for the factory floor. They have become the primary solution for national survival. The Ministry of Economy, Trade and Industry is also acting fast. The Japan Times, a leading English news source, notes new government measures. METI has launched startup aid for AI transformation in regional Japan. This initiative, called AX, aims to bridge the productivity gap. Investors should focus on the key players in this robot frontier. Murata Manufacturing is a vital component provider for these machines. Its stock price has surged 198% over the last 3 months. The RSI is currently 89.4, indicating an overbought state. However, the price maintains a strong uptrend above its averages. SoftBank Group is also a major driver of this AI transition. We observed a MACD Golden Cross for SoftBank on May 25. This signal suggests renewed momentum for the tech giant. Even Dell Technologies is part of this global AI infrastructure. Dell's stock has risen 218% during the same period. This frontier is more than just a technological curiosity. It is a necessary structural response to a shrinking workforce. Global investors can find a unique entry point in this sector. Japan is transforming its demographics into a catalyst for growth.